time now to shift focus to the crucial FOMC meet that we've been alluding to since the start of this show. Markets tomorrow, the two-day meet will be concluding today. The markets seem to have factored in a rate hike. It's been a unanimous verdict that if we don't see Janet Yellen announce that rate hike, later tonight, it's not going to augur well for the equity markets globally, or even for that matter, the bond market and the currency markets as well. Tanveer, as always, joining us to tell us what we can expect later tonight.
Well, overnight tonight, the FOMC meet would conclude, and the Fed is expected to announce formally the unwinding of its balance sheet, the size of which has been $4.5 trillion at last count. Now, this is not going to be a market-moving event because the market doesn't know how this event would unfold to impact world liquidity that's fueled equity markets and other asset classes across the board over the course of the last 10 years. So it's a bit of a walk into the unknown. What is expected is that they would announce $10 billion of asset-backed securities, mortgage-backed securities and treasuries being sold back into the market on a monthly basis, with the clause of $10 billion to be added with each quarter. I think the limit that they want to reach at a given point in time is $50 billion of bonds being sold into the market on a monthly basis. They're also targeting to bring the balance sheet size down to $3 trillion by the end of 2019. So it's going to be very...
We're getting some perspective now from a global guest coming in. Michael, Head of Research at Ascendo Market, is joining us on the phone line from London. Michael, what do you expect? How do you think markets and investors will react to this Fed meet?
Well, I think this is actually potentially one of the best telegraphed meetings that we'll have had in quite some time. I mean, just a quick look at the Fed funds futures, and we're looking at not quite a zero probability, but nothing out until December, where the probability jumps to 50%. So I don't think there's any qualms that we're or any discussion about getting a rate hike tonight. Furthermore, I think markets are very much prepared to hear, as your colleagues and guests were discussing earlier, about the starting pistol being fired on this quantitative tightening or unwinding the balance sheet. So again, stopping the reinvestment of maturing paper, starting with just 10 billion. Again, it's more gentle, baby steps. It doesn't want to create any more tantrums. Markets are ready for this, to hear about 10 billion, as I said, gradually increasing every quarter to a ceiling of about 50 billion. So I think markets are in a position where I don't think we are going to get a big surprise, unless you factor in any risk of the Fed adopting a very hawkish or indeed dovish approach. But I don't think it will want to disturb the markets too much right now. President Trump is still struggling to get policy and stimulus through. So even
everybody seems to have factored in that rate hike.
Yep.
Michael, apologies for interrupting you. The markets seem to have factored in that rate hike, and if we don't see it, it's certainly going to be a shocker, I would imagine, for the equity markets, the bond markets, currency markets. But what about the unwinding of the balance sheet? How crucial is that, and what exactly are you expecting?
Well, this is crucial. It's another path in terms of policy normalization. We've gone from rate cuts to quantitative easing to tapering. Then we started with the rate rises, and now this is quantitative tightening. So we're doing a reverse of the tapering. So it's slowly, it's steady. It's a very gradual return to more normal policy without getting markets too flustered about too much happening at once. So I think markets are very ready for this. I don't think there'll be any surprises this evening. Again, it will remain the outlook, and whether we can really be expecting another Fed rate hike in December, which markets are factoring in to the tune of about 50% probability right now.